Hey folks, Dan Frio here with your real estate update for what is today, December 8th, 2023. So the big anticipated number that we were all waiting for is the jobs report. Now, why the jobs report? Why is it so important? Well, the Federal Reserve's meeting next week, and they're going to tell us if they're going to increase rates or not. What they really focus in on is two things, inflation and jobs numbers. So they really wanted to see the jobs numbers starting to really pull back, meaning less and less people are working. They wanted the unemployment rate to tick up. Let's get over and see what happened. So the headlines you're going to see right now is U.S. payrolls rose by 199,000 in November, and the unemployment rate falls to 3.7%. So my anticipation from yesterday, if you watch yesterday's video, I was honest with you guys. I said, I don't know where this report's going to come in at, because we had a lot of unions that were on strike that resolved those strikes and they're back to work. We had pilots, we had United Auto Workers, we had people in the medical field. We had, what else was out there? The Writers Guild. There's a ton of people, millions of people on strike trying to get more wages and more benefits. Okay, so that's where I was like, well, those people aren't on strike anymore. They're back to work. Plus, you also have seasonal workers. It's the holiday time. Usually companies, they'll hire more and more people just to fill some voids. So the thing that right now that really is kind of shocking the market is the unemployment rate falling to 3.7%, because the Federal Reserve, they really wanted this number to go up to 4%. So if we take a little bit of a deep dive into the employment numbers, we're going to do that here in a second, but I also want to go over the wage growth that we're starting to see. So those are the two components that the Federal Reserve's watching, and that's what the markets are watching as well. So I don't know about you guys, but have you been out to dinner recently, and is the service normally up to par like it used to be? Now, no disrespect to you servers out there. You guys are understaffed, okay? Recently also, I went to the doctors for a physical, and then I had to go back for a couple other checkups, and you sit in the waiting room, and the last time I was there was waiting times up to 1 hour because they're understaffed. So if we take a deep dive into where the employment numbers are upticking, they're really well needed. So let's take a deep dive into that at first. So we have non-farm payrolls rose to 199,000. It was anticipated at about 180,000, so it was more than anticipated, but we got to take a deep dive into those numbers. Where the numbers were the most increases were, well, healthcare, you can see right there. The government, okay, they're spending like crazy, and leisure and hospitalities. Those are the areas that we're seeing. But the one area that's really shocking all right now is average hourly earnings. Those are upticking as well. So this report is showing more people working and they're making more money. This is going to cause an instant reaction in the bond markets. I'm going to show you that here in a second. I'm just giving you the context of what's going on. You're going to see stocks pull back and interest rates uptick. So that's the first thing we want to talk about. That report is right here. As we go over our economic data on a daily basis, you're seeing all that right here. Average hourly earnings is expected to come in at 0.2, came in at 0.4, so double that. You have non-farm payrolls, anticipated the last reading was 150, anticipated at 180, came in at 199, dropping the unemployment rate from 3.9 to 3.7. So that's the headlines you're going to see. But let's really go in. Okay, so I kind of explained to you the areas that are seeing an uptick in employment, okay? And we had those areas, plus, like I said, you had the auto workers and all that other stuff. But now we want to take a deep dive into the wages, because this wage report was a little shaky. But if you go in, let's look at some of the people that were on strike. How much did they get out of that strike? Because we want to figure out, why are wages going up so much? So you go over here, United Auto Workers got at least a 25% increase to paid workers, okay? That's a big increase, okay? 25% of the highest paid. If you're on the low end of the pay scales at the United Auto Workers, you might see an uptick of up to 160% of a pay increase. Okay, so the high wage earners are going to get 25% more. If you're down on that income ladder, you might see incomes go up 160%. Big raises there. Next thing we want to look at is right here. Performers, the Hollywood Guild and the writers and everything, they also got a pay increase, 7%. Okay, then you go over to how much the pilots are getting. Pilots in most cases are getting a 40% increase. So if you're out there and you're like, hey, what about me? Yeah, I'm asking the same thing. I didn't get a 40% or a 25% or 160% increase in my wages, but these are the areas that's really taking effect in the markets right now. So God bless you guys for getting those raises, but I'm just here to explain to you guys who's getting those raises, and where the employment numbers are ticking up. Okay, so that's the first thing. The next thing is, remember, I hate government spending. They're spending like drunken sailors. Well, Biden forgives another $5 billion in student loans. Okay, so I might come across as a Scrooge when it comes to student loan debt, but I don't think that the taxpayers should be paying the bill for people that went to school. That's all I'm going to say with it, because we don't have the money to spend right now on things because we have a federal deficit, meaning we don't have enough money to pay our bills. So to continue to just keep forgiving some debt from people that, I'll leave it at that. But you understand where I'm going. Another $5 billion is going to get added to our already $33 trillion deficit. Okay, so these are the things that's causing interest rates and the Fed to sit back and say, guys, we try to keep fixing this problem, but the government keeps spending and spending and spending, and it's just a ripoff. So let's get over to see what this information is actually doing to the bond markets. So we go over here, and it is a big day, a big bad day when it comes to mortgage rates. So what you're seeing right here, how I follow mortgage rates on a daily basis is, many people follow the 10-year Treasury. What you're seeing right here, that upticked, now we're over 4.2%. But if you really want to take a deep dive into where mortgage rates are going, you need to follow the mortgage bonds. So how to do that? Well, just look up what the MBSs are doing. What the MBSs are mortgage-backed securities. It's a bond that trades on Wall Street. And if you're new to my channel, I'm going to make this as simple as I can for you. What we follow here is what's going on in the price of the bond, what you're seeing right now. Okay, so that's that. What we're looking at right here is, wow, that was just a big adjustment. What we're looking at is right here is it up or down? Okay, so all you need to know, if this number goes down, what you're seeing right now, you're gonna see rates go up. There's an inverse relationship. So we love when the number goes up because it means it's bringing down rates. So if the price of the MBSs are up, rates are down. Prices are down, rates are up. Over the last month, here's what we've seen. Let's just go over the last 5 days. We're basically stagnant. We gave it back all of our gains for the week. Here's where we started the week. It increased up, meaning rates came down, and we basically gave it all back just this morning. I'm anticipating that the markets are going to stabilize. They're going to look at these numbers, digest in, who added to the jobs report, who added to the wage growth. Everything will subside, and we'll be back next week. Things will start to balance out, and we'll hit those mortgage rate kind of lows on what we've seen earlier this week. So that's my report for the day. You guys might be asking, Dan, who are you? What do you do? Well, great question. My name, like I said, is Dan Frio. I do this report on a daily basis, but what I am, I'm actually a mortgage advisor, licensed in all 50 states as well as Puerto Rico. So if you're out there and you need to get maybe pre-qualified for that first house, maybe you're looking to run some numbers through somebody to see if you can buy that first investment property. You're looking to maybe pull out some money to refinance, to maybe pay off some of those high interest rate credit cards. This credit card debt hit $1 trillion for the first time ever. So people have a lot of money or a lot of equity stored up in their house. Maybe look at being a good steward of your money, paying off those 25% interest rates with maybe a little bit more affordable mortgage. How do you do that? How do you reach out to me and my team? Well, just go to therateupdate.com, and here it is right here. You're going to find tons of resources. But there's two things I want to point out to you. One, if you're locked in on a rate right now with a lender and you haven't closed yet, let us review your numbers. Okay, so what I ask people to do on a daily basis is upload your loan estimate. What is a loan estimate? Well, when you get pre-qualified for a loan or a mortgage to purchase your first house, once you do that, the lender has to send you out a package. That package is going to consist of a loan estimate. It's 3 pages. It goes over the property's address, price of the house you're paying, what the loan amount is, the rate, and all the fees. Okay, what we're going to do by you uploading it into that system, we're going to analyze your quote with over 60 of the country's largest banks, credit unions, and mortgage companies to see, can we get you a better rate? Can we get you lower fees? Can we get you a better rate and lower fees? That's our goal. But if you're out there and you're like, hey, Dan, I'd like to apply or at least talk to somebody to see if I can qualify, 3 ways to do that. 1, hit the apply now button, you'll be on your way. But if you're out there and you're like, Dan, can I call? Can I email you? Absolutely. Just scroll to the bottom of the screen. You're going to see a whole bunch of things, articles, blogs, what kind of programs are out there, mortgage calculators. And then when you get to the bottom, you're going to see this, my 800 number, as well as my email address, and it is right there. So have a great day, folks. I hope you learned something today. If you haven't subscribed to my channel yet, please do, and that button is right down below. God bless. Have a fantastic Friday and weekend, and I hope to see you back here on Monday. Take care.